Hey guys, so today the earnings report dropped, so I figured now would be a good time to give you guys an update. Right now, it may look very bad, and like the stock will probably go down quite a bit, but uh, you know, it's gonna be okay. So, I want to talk about the reason why it went down. Uh, Most of it is due to the decline in um, North American sales, and that is largely attributed to the macro situation. And what I basically mean with macro situation right now is the higher interest rates, because the inflation is very high, so the interest rates go up to combat it. So there you see a chart of the inflation going up. Not the inflation, the treasury yields. So um, you might think, why does that? Why do interest rates matter for whether or not people from North America get 5G or not? And that is basically because of this. Um, e- every telecommunications company, they function on a ton of debt because the initial capital requirements of starting a telecommunications business is very high because it costs a lot of money to build the infrastructure, and it also costs a lot of money to maintain the infrastructure. Not only that, but a lot of these companies have a huge dividend payout ratio, meaning they pay out like half of their free cash flow in dividend because the market is pretty saturated, so it's not very attractive to investors unless if they pay a big dividend. But that is basically uh, why we're not seeing much investment from North American 5G. They just struggle to get the capital because right now they have a lot of outstanding debt with interest rates going higher. Um, so why I still like it? Basically, in my last video, I talked about how I really like the enterprise solutions and the network as a service, and that should grow like pretty much regardless of rates. Like it is a bit affected by rates because companies still need to invest the money, and they would probably prefer to do it with debt, but right now it's probably better to do it with cash. But the initial capital requirement of enterprise solutions is a lot cheaper than providing 5G to an entire area. So the net sales in Q3, if you just look at the enterprise solutions, grew by 5%. And they added 85 customers, and private wireless grew 40 customers, which is quite a lot. And you have to keep in mind that this is recurring revenue. The 5G rollout is not necessarily recurring revenue. Like you put down the 5G infrastructure and then you get like recurring revenue from maintenance, but it's like less than just the initial investment. But with enterprise solutions, you don't have that. They just keep on paying, which is really good. So as long as this keeps growing, it's I'm still happy with the stock. Uh, Also, you got like cloud networks. They are growing pretty slowly but stably, so that's nice, I guess. And you also have Nokia Technologies, which had like a loss, but that should also stabilize soon. So then we look at my position. It's not that big because I don't have that much money and I'm pretty diversified. But right now it's at a 50 euro loss, so not too big of a deal. I like this month I probably will buy about 150 euro more of Nokia stock because I'm still feeling pretty confident. Like this may be a bad year, next year might be a bad year, but after that, like just simply the moment rates go down, we're probably gonna have a happy time because all the telecommunication companies get to get a shit ton of debt again, and then gonna get that 5G juice, So it's gonna be fun. Uh, so yeah, this was my update. Hope you enjoyed it. Thank you for watching.